Here's something most folks receiving disability checks don't fully understand, and frankly, the Social Security Administration doesn't make it particularly easy to grasp. You're collecting SSDI, Social Security Disability Insurance, and one day, without you lifting a finger, those payments transform into something entirely different. No application, no phone call, no paperwork, just an automatic switch that happens based solely on your birth year. Now, I've spent decades studying how systems work, how incentives operate, and how bureaucracies function. And this particular mechanism reveals something fascinating about our Social Security system that affects roughly 7.2 million Americans currently on disability. The transition I'm referring to happens when you reach what the government calls full retirement age, which isn't 65 anymore, by the way. For anyone born in 1960 or later, that age is now 67. Born between 1955 and 1959, your number falls somewhere between 66 and 67, depending on your specific birth year. The moment you hit that full retirement age milestone, your SSDI benefits automatically convert to regular retirement benefits. Same dollar amount, same payment schedule. But here's what changes and why it matters. Those continuing disability reviews stop completely. The government no longer checks whether you're still disabled. You're simply receiving retirement benefits like everyone else who worked and paid into the system. Your Medicare coverage continues uninterrupted, assuming you've already been receiving it after that mandatory 24-month waiting period that comes with SSDI approval. What puzzles me is how many people approach retirement age on disability without grasping this automatic mechanism. They worry unnecessarily. They call Social Security offices asking what forms to file. They lose sleep over whether their income will stop. And the answer is simple: nothing stops, nothing changes in your bank account, and nothing requires your action. The bureaucracy handles this conversion internally seamlessly. But, and this is where clear thinking becomes essential, there are specific circumstances where this matters enormously. If you're receiving certain state disability benefits or workers' compensation that offset your SSDI, those offsets may disappear when you convert to retirement benefits. That could mean a higher monthly check. If you've been reporting earnings to Social Security because you've tried working under those trial work period rules, once you're on retirement benefits, those reporting requirements vanish. You can earn whatever you want without jeopardizing your benefits, assuming you've reached full retirement age. The 12-month element people often misunderstand relates to qualifying for SSDI in the first place. Your disability must last or be expected to last at least 12 consecutive months or result in death. That's the durational requirement. But once you're approved and collecting those benefits and time marches forward to your full retirement age, the automatic transition is instantaneous. First day of the month you reach that age, your classification changes in Social Security's computer systems. This represents one of those rare instances where government bureaucracy actually works in your favor without requiring you to navigate paperwork or stand in line. The system recognizes that at full retirement age, the distinction between too disabled to work and retired from work becomes meaningless from a benefits perspective. You've paid into the system through your working years, and you're entitled to benefits. The label changes, the money doesn't. What I want you to understand from this discussion is simple. Knowledge removes anxiety. If you're collecting SSDI and approaching your full retirement age, check your birth year, know your specific age milestone, you can rest assured this transition will happen automatically. Your job is simply to ensure Social Security has your correct mailing address and banking information for direct deposit. Everything else, the system handles it, and that's exactly how it should work. Now let me walk you through the deeper mechanics of this system, because understanding how something works gives you power over your own financial future. I've always believed that the best decisions come from understanding incentives and mechanisms, not from trusting blind faith in bureaucratic promises. So let's examine what's really happening beneath the surface of this automatic conversion and why it matters more than most people realize when they're collecting disability benefits and watching the calendar tick toward their retirement years. The first thing you need to grasp is that SSDI isn't some separate program that exists in isolation from regular Social Security retirement benefits. They're calculated using the exact same formula. When Social Security approved your disability claim, they looked at your earnings history, all those years you paid into the system through payroll taxes, and they calculated what your benefit would be if you had reached full retirement age at that moment. That's your SSDI amount. It doesn't matter if you became disabled at age 35 or 55. The calculation treats you as if you'd worked until full retirement age and retired with whatever earnings record you had accumulated up to the point of your disability. This is fundamentally important to understand because it means your SSDI benefit already is your full retirement benefit. There's no reduction, there's no penalty. You're receiving exactly what you would have received if you'd worked until full retirement age and then filed for regular retirement benefits. Now, why does the government structure it this way? Think about the incentives. If someone becomes too disabled to work at age 40 and they've paid into Social Security for 20 years, the system recognizes that their inability to continue working isn't a personal failing or a choice. It's a medical reality. So the program treats them as if they had continued working and paying in until full retirement age, even though they couldn't. That's the insurance aspect of Social Security disability insurance. You paid premiums through your payroll taxes, and when the insured event happened, becoming unable to work due to disability, the policy pays out based on what you would have earned if the disability hadn't occurred. It's actually quite elegant when you strip away the bureaucratic language and look at the underlying structure. But here's where things get interesting, and where that automatic conversion at full retirement age starts to make perfect sense from a systems perspective. While you're receiving SSDI, Social Security conducts what they call continuing disability reviews. These are periodic checkups where the agency examines whether you're still disabled according to their definition. The frequency depends on your specific medical condition. If your condition is expected to improve, they might review your case every 6 to 18 months. If improvement is possible but not likely, they review every 3 years. If improvement isn't expected at all, they might only review every 5 to 7 years. During these reviews, they're asking fundamental questions. Has your medical condition improved enough that you could return to work? Have new treatments become available that might restore your ability to work? Are you following your prescribed treatment plan, or are you refusing treatments that could help you improve? These reviews create administrative burden for both you and the Social Security Administration. You have to submit updated medical records, possibly attend consultative examinations with doctors hired by Social Security, fill out detailed questionnaires about your daily activities and limitations. The agency has to pay examiners to review all this evidence, pay doctors to conduct examinations, make determinations about medical improvement. It's expensive, it's time-consuming, and here's the crucial insight. Once you reach full retirement age, all of this becomes completely unnecessary and irrelevant. Why? Because at full retirement age, you're entitled to retirement benefits regardless of whether you can work or not. Every American who's paid enough into the system gets retirement benefits at full retirement age. There's no medical examination. There's no question about whether you're disabled. The only question is whether you've earned enough work credits throughout your lifetime, and if you qualified for SSDI, you've already proven that you have. So the automatic conversion is really just Social Security recognizing that administrative reality. They're not doing you a favor. They're not being generous. They're simply acknowledging that it makes no sense to continue conducting disability reviews on someone who's entitled to benefits anyway based purely on their age and work history. The continuing disability reviews stop because they've become pointless. You're getting paid either way. The label on the check changes from disability to retirement, but the underlying entitlement remains identical. Same amount, same payment schedule, same everything. The system just stops asking whether you're still disabled because that question no longer determines your eligibility for benefits. Let's talk about Medicare for a moment, because this is another area where understanding the mechanics prevents unnecessary worry. When you're approved for SSDI, there's typically a 5-month waiting period before you receive your first disability check. Then there's an additional 24-month waiting period before Medicare coverage begins. So if you became disabled at age 50, you might start receiving SSDI payments when you're 50 years and 5 months old, and your Medicare would kick in when you're 52 years and 5 months old. That 24-month Medicare waiting period has nothing to do with whether you've reached age 65. It's purely tied to how long you've been receiving disability benefits. Once you've qualified for Medicare through SSDI, that coverage continues for the rest of your life, assuming you continue receiving either disability or retirement benefits. When your SSDI converts to retirement benefits at full retirement age, your Medicare doesn't change at all. Same coverage, same premium, same everything. If you were paying the standard Part B premium out of your SSDI check each month, that deduction simply continues being taken out of your retirement benefit check. The only significant Medicare milestone at age 65 is for people who never had disability benefits and are signing up for Medicare for the first time based on age. Those folks have an initial enrollment period around their 65th birthday. But if you already have Medicare through SSDI, turning 65 is just another birthday. Your Medicare coverage continues uninterrupted regardless of whether you're under 65 or over 65 when your disability benefits convert to retirement benefits. I mention this because I've seen too many people waste emotional energy worrying about Medicare coverage disruptions that simply cannot happen under the system structure. Now, there are some edge cases worth understanding where the automatic conversion can actually increase your monthly benefit. If you're receiving SSDI and you're also receiving workers' compensation or certain state disability benefits or a government disability pension from work where you didn't pay Social Security taxes, those other benefits can reduce your SSDI payment through what Social Security calls an offset. The agency doesn't want you receiving combined disability payments that exceed a certain percentage of your average current earnings before you became disabled. But those offset rules only apply to disability benefits. They don't apply to retirement benefits. So when your SSDI converts to retirement benefits at full retirement age, those offsets disappear. Your workers' compensation doesn't stop. You keep receiving that. Your state disability pension doesn't stop. You keep receiving that. But Social Security stops reducing your monthly payment to account for them. This can mean a sudden increase in your Social Security check the month you reach full retirement age, sometimes a substantial increase depending on how much your SSDI was being offset. This reveals something important about how these programs are designed. The offset rules exist to prevent people from having a higher income while disabled than they had while working, which could theoretically reduce the incentive to attempt returning to work. Whether that's good policy or not is debatable, but that's the logic. Once you reach retirement age, those incentive concerns evaporate. Nobody expects you to work at age 67. The offset rules no longer serve any purpose, so they're removed. Your retirement benefit is calculated based purely on your earnings history, with no adjustments for other income sources. Again, understanding the incentives and the system's logic helps you see why things work the way they do. There's another scenario that sometimes confuses people, and it involves the difference between SSDI and SSI. Supplemental Security Income, SSI, is also administered by Social Security, and it also provides benefits to disabled people, but it's a completely different program with different rules. SSI is a need-based program for people with very limited income and very limited assets. You don't need work credits to qualify for SSI. You just need to be disabled and poor according to Social Security's definitions. Because SSI isn't based on your work history or earnings record, SSI benefits don't automatically convert to retirement benefits when you reach full retirement age. Instead, you continue receiving SSI as long as you remain disabled and continue meeting the financial eligibility requirements. However, at age 62, if you have any work history at all, Social Security requires you to file for early retirement benefits. If you qualify for even a small retirement benefit based on your work history, that retirement benefit will reduce your SSI payment dollar for dollar. You're still receiving the same total amount, but the composition changes. Part comes from retirement, part comes from SSI. This distinction matters because the rules are fundamentally different for these two programs, and people sometimes confuse them or assume they work the same way. If you're receiving SSDI based on your work history, you get that automatic conversion to retirement benefits at full retirement age, and the amount stays the same. If you're receiving SSI based on financial need, there's no automatic conversion. You just continue on SSI as long as you meet the eligibility requirements, though you may be required to apply for retirement benefits if you have enough work credits to qualify. Let me address something that causes needless anxiety for many people approaching retirement age while on disability: the fear that something will go wrong with the conversion, that a bureaucratic error will interrupt their income, that they'll somehow fall through the cracks. I understand this fear. When you're disabled and living on a fixed income, every dollar matters. The thought of your benefits stopping, even temporarily, while some clerk fixes a computer error is genuinely frightening. But here's what I want you to understand about how this process actually works behind the scenes. Social Security's computer systems track every beneficiary's date of birth. Months before you reach full retirement age, the system flags your case for conversion. There's a queue of cases that need to be converted each month. The process is automated. On the first day of the month in which you reach full retirement age, your benefit type code in Social Security's database changes from disability to retirement. That's it. Your payment amount doesn't change. Your direct deposit information doesn't change. Your Medicare doesn't change. Just an internal classification code switches from one value to another. The system is designed this way specifically to prevent interruptions. There's no human decision-making required for routine conversions. No examiner needs to review your case and decide whether to approve the conversion. It simply happens automatically based on your date of birth. Now, could there be an error? Of course. Any system involving millions of records and complex software can have errors. But the conversion itself, the core process of switching your benefit type from disability to retirement, is one of the most straightforward operations in Social Security's entire infrastructure. It happens tens of thousands of times every month, and the vast majority occur without any problems at all. If you want to verify that everything is set up correctly, you can create a My Social Security account on the Social Security Administration's website. This online account shows your benefit information, your payment history, your Medicare information. You can check a month before your full retirement age to confirm that your payment is scheduled to continue. You can check right after your full retirement age to confirm that the payment continues at the same amount. This kind of verification gives you documentary evidence and peace of mind without requiring you to call Social Security's overwhelmed phone lines or visit an office. There's a broader lesson here about how to think about Social Security and government benefits programs generally. These systems are enormous. They serve tens of millions of people. They involve trillions of dollars over their lifetimes. And because they're so large and so important, they're actually more stable and more reliable than people often give them credit for. When you hear about Social Security problems in the news, you're usually hearing about edge cases, somebody with an unusual work history, somebody who lived abroad for part of their career, somebody dealing with a deceased spouse's benefits and their own benefits simultaneously. These complicated situations do require human review and can involve delays and errors, but the core operations, paying existing beneficiaries their monthly benefits, conducting routine automatic conversions at full retirement age, these are processes that Social Security has been doing successfully for decades. The infrastructure is solid, the procedures are well established, the automation is reliable. What you need to focus on is making sure your basic information is correct in Social Security's records. Is your mailing address current? Is your direct deposit information accurate with the right bank account number and routing number? Has Social Security been notified if you moved, if you changed banks, if your phone number changed? These are the practical details that matter. The conversion itself will happen automatically, but if there's a problem and Social Security needs to contact you, or if you need to contact them, having accurate contact information on file prevents delays and complications. This is simple housekeeping, but it's the kind of simple housekeeping that prevents the nightmare scenarios people worry about. Let me return to where we started with this discussion. The 12-month element that people sometimes misunderstand isn't about the conversion at retirement age. It's about qualifying for SSDI in the first place. To be considered disabled under Social Security's rules, your medical condition must be expected to last at least 12 consecutive months or result in death. That's the durational requirement. It's why Social Security doesn't provide disability benefits for someone who breaks a leg and is out of work for 3 months. It's why they don't provide benefits for someone recovering from surgery who'll be able to return to work in 6 months. The program is designed for long-term serious disabilities that prevent sustained employment. That 12-month minimum duration is baked into the definition of disability itself. If your condition won't last a year, you don't meet the disability definition, regardless of how severe your symptoms are during the time you're impaired. But once you're approved and receiving SSDI benefits, and once time passes and you approach full retirement age, there's no 12-month waiting period for conversion. There's no additional durational requirement. The conversion happens instantaneously on the first day of the month you reach full retirement age. Your benefit status changes from disability to retirement in Social Security's computer systems, and everything else continues unchanged. This is one of those situations where the complexity is in qualifying for benefits initially, but once you're in the system and receiving benefits, the ongoing operations are actually quite straightforward. Understanding all of this, the calculations, the incentives, the automatic processes, the exceptions, the timing, puts you in control of your own financial planning as you approach retirement age while receiving disability benefits. You know what to expect. You know what won't change. You know what might change in specific circumstances, like having workers' compensation offsets. You know that your Medicare continues. You know that disability reviews stop. You know that no action is required on your part. This knowledge eliminates uncertainty, and eliminating uncertainty is one of the most valuable things you can do when you're dealing with something as important as your monthly income in retirement. The system isn't perfect, but in this particular case, the automatic conversion from SSDI to retirement benefits is designed to work in your favor without requiring any effort from you. Take advantage of that. Verify your information is current with Social Security. Then trust that the system will do what it's designed to do, because tens of millions of times over the past decades it has.